Hey guys and gals, it is Mark Coe for 23rd of July. Just wanted to take a look at some of the short-term trading that was available today in our um, focus on crude oil and E-minis. So it was a nice day in terms of what was on the board for opportunities. And let me just show you, because it's real important to understand that all of the big zones are diagnosed well in advance. It was funny because I actually had a conversation with um, the subscribers in the room, and I asked, when I talk about these levels far in advance, do they translate? Do you remember them? And it was funny just because they're talked about so far in advance. Sometimes people say, "Well, I need a little reminding." So we're going to give a little reminding, but that's all good. So let me just show you what we had walking into a Monday morning. So first off, levels. This is what you learn in my class. It's levels, levels, levels. Bottom edge, top edge, levels. So this is the first area we're working on, 68, 80 to 90. Again, 67.55, that was a support zone today, and that will come into reference later, so just keep an eye on that number. And then below that, we're working 66 and a half. That never came into play today. So these are the zones that come into play, the 68, 90, 80 area, and then again down towards the 67 and a half. So let me show you what opportunities were there on the short term with the day trading that we're using. Again, the idea is, what can you really do with one contract? And obviously, there are people that can trade more, there are people that trade minis, but the idea is really, what kind of production can you get with one contract? And so that's really the focus. So if you remember on the 4-hour chart, again, these levels are well diagnosed, well in advance. That's diagnosed well in advance. So the 68, 80, 90 area is already on your screen. So first move down here. So what are we looking at? We're looking at some sell count, which is a trigger, a sell signal up here at 69.10. Not really interested in that because it's above the level. What I want is trades that are using the level as resistance. So this is actually a better price, and we did get some buy stuff in here that you're able to lean on. But from a sell standpoint, I was not interested in sell trade up above this, what was resistance and then became support. Later in the morning, it broke support and establishes itself as resistance again. So let me show you. I know it's a higher price earlier in the day, but I want the probability. I want the idea that I'm trading underneath the resistance to be a seller, and that's what I get at 11:45 this morning. So at 11:45, I can now go back and lean on the same spot as resistance. So at 11:45 a.m., it issues a sell signal at 68.62, which then rotates all the way down to where you see it turn. It's $880 on that move. So that's an 88 tick move per contract, right? Standard contract in crude oil, $880 from that point to that point. So you remember I talked earlier about the 67.55 area. Again, not to the tick, but you see where it starts to bounce. Again, that level was well diagnosed and on screens and there for everybody to see. So that was really the only opportunity late in the day, but not overly magical. Again, I'll stick with that 880 being your net P&L there on crude oil. There were a couple opportunities up here with long and then flipping back to short, but they pretty much netted out with not a whole lot going on. So that's really the one you sit with. E-minis. Let's look at E-minis. So E-minis is the other market we focus on in the short term. Couple opportunities here in E-minis, and let's just get a little lay of the land. It's always important to understand the context in which you're looking at these things, because you're not staring at 5-minute charts. So what I teach everybody to do is this top down, where you understand what the bigger levels are that you're leaning against, and then once you get short-term signal, they're that much more powerful. So this 27.93 area has been some support. So as long as you're getting buys signals above this 27.93, you're good. What was using as resistance was 28.14, and then the just above the highs 28.20. So anything here, this was the plan walking into Monday. Any sells up against 14 or 20 were good, and any buys against this 90 to 93 were good. So that was the idea. That was the game plan walking in. again, 8:30 a.m. briefing, that's what we're looking at. So from that, what you're looking for, do you get any buy signals above 93? Do you get any sell signals in front of 28.14 to 28.20? Well, just as things would have it, here's your buy signal, 2800 spot 75. Now this is at 10 in the morning. Again, I'm not interested in sell signal because I'm on top of support, so I'm using the levels to guide me. I'm interested in buy signals. So buy signal 2800 spot 75, that comes at 10 a.m. You can see we have some short-term edge to deal against, and what that means, deal against, that means use it as support, where you get a good indication if that breaks that you're not correct in this position. 2800 spot 75 rotates up to 2808, so that's a 7.25 points in the S&P, so just over $350. Comes back again with a buy just under the prior exit, so you're only looking at about $350, but total that up with your crude oil, and it's over $1,000. It's actually over $1,100. So not a bad Monday. Again, you know, the idea is, we talked about this last week, where there were a couple $1,000 days, there was a $500 loss day. Keep that in mind where you see the gains outsizing the losses. That's the way you need to keep that focus. But I like this idea of this approach against the zones with your shorter term signals. So hope you guys enjoyed the day, and we'll look forward to more of it tomorrow. Cheers.